S&P futures stopped at two critical levels. Nasdaq makes a higher high only to reverse end of day. Semiconductor rally is short-lived. We'll explain what to look for this week. What the New York Stock Exchange Composite Index is telling us. S&P stocks above their 200-day moving average continue to decline. We'll tell you what to watch for. What the Nasdaq's relative performance against the S&P is pointing out. ONON Holdings down 14% today. Target breaking down ahead of earnings tomorrow morning. We'll discuss what to look for and how this can affect Walmart. NVIDIA has failed to rally and how to play it. Hawaiian Electric is down 32% today. We'll explain why it could be just getting started. We have a ton to go over. Let's get to it. Hey everybody, welcome back. Let's start with the basics. The 55 right here, the 55 SMA, that is what I use. We stopped dead on it. You can see right here, 45.53. So you came to this pretty critical level, but there's a lot more to it than this. I do think it's worth noting that we did stop here. We have hit down here before, and we have stopped in this range. There's also been times we've cut through it and it looks like it was the end, but then again, it turned out not to be. So this is a pretty critical level for us to watch. You will see battles around this area. We'll flip from support to resistance. It's a big level for us because really what this is institute sponsorship. So if that goes away, that is something that we really want to watch. Now, if we take a look at this by drilling into it, you can probably already see the head and shoulders, but we've been going over this in the pre-market, and if you've been following them for some time, these videos all follow together. That's why we always tell people, it starts with Saturday, and then we just follow through during the week. But you can see here, left shoulder, you can see the head, you can see the right shoulder right here, and then of course right here is your neckline. So we can see that, and then you have the retest right there. So 45.61 is a huge level. You're definitely going to want to watch that level. There's more going on here. One of the things we were talking about in the room today is the channel. So what you'll notice coming straight across is you'll note this channel. You tried to get over it and you were unable to. Now, if you go here and you clone these lines, you always want to clone them so you have the same trajectory, and you pop them in, you can see very clearly two things happened today. Number one, you rejected very clearly at the 55, but number two, where else did we reject? Well, number two, we rejected right at the lower end of this channel, and you can see pretty clearly that we've been respecting this channel since it's been open, and now you can see the top end of the channel, we're at the low end. So this is a potential bounce spot. Now there's some earnings that are coming out tomorrow that might not make it a bounce spot, and we're going to have to watch this. But this is a really critical level because you have this falling wedge here. So you don't want to break the falling wedge, because if you do, you can take the measured move of the falling wedge. So in other words, what you would do is just take this move from here to here, and you would just kind of measure that down. And that measured move will give you 2.5%. So then what you would do is come here and say, okay, well, that's 2.5%. And then you would, if you crack a wedge, you take the height of the wedge and you measure it out. And that would take you to 2.5%. So cracking there, they're telling you roughly that 43.30 level, which is kind of an interesting level. We talked about this before. Might as well drill back into that really quickly on the daily here and look at where that would put us. So that would really put you as a retest right back to there. It's not really the end of the world. From the top of this down to there would be about 6%. It's not really a crazy correction when you think about it. So that absolutely could happen. It's definitely something that we have to pay attention to. You're seeing a lot of this pattern, this very particular pattern here, where we're seeing these double tops all over the place. So don't think, oops, let's do it that way. I'll get used to it. So don't think that that's not a possible double top. Now, it needs to do a lot for that to happen, but you are seeing a lot of signs that this might be a double top. So I really want to pay attention to this. It's very important. I would watch this 44.50 level like a hawk tomorrow. I would pay very close attention to this 55 and see how you act there. If we crack that, it will be following the Nasdaq and not leading the Nasdaq. Now, if you look at the Nasdaq's already made its decision. We talk about this pattern, and hopefully you can see this everywhere, but I like pointing them out because sometimes what I see, people they just don't really see the same thing. So this is a more, in my opinion, it's a scarier double top because you actually got a bit. You can see here, and then what are you doing? You're unable to stay in that area. So if you can't stay in that area, and then you're cracking right here. So if we drill into that and just blow that up for a minute and really get in there, that's about like the meanest thing that they can do. In other words, they pop you over like they're going to go. And then they've been doing a lot of this. A lot of the algos and high frequency traders, what they're doing is they're popping us over, getting a higher high, luring people in, and then they're sweeping the legs. This provided a huge short for us today in the room on the video. I'll walk through that. There were some great short opportunities and put buying opportunities today. It was pretty good, to say the least. It's been a long time since we had a day, in my opinion, that was this easy. But you flipped over and then you made that higher high and then you just reversed. Now you're going to say, oh, we have a bearish engulfing. I think it's actually, it's not technically a bearish engulfing. You're not fully there. For me, I think it's a little worse than that, because what's happening is as the 55 is rising, we're closing lower and lower on the 55. So I'll explain what I mean by that. As the 55 rises, that price changes. So if you come here and you look at that price, so you have 15,165. You can see the numbers right over here. And I'll just point that out so that you can see what I'm trying to explain. The number will be right there. So if you look at the 55 is increasing. So you close here, but the 55 is still rising. So then you close over it, and then you close here again. Well, this close, even though this one, they look like they're in line, this one's actually worse because you're further off the 55. A lot of people don't think like that. I do, and I think it's a really important distinction. You don't want to be further and further off of the 55. When you start to see that, it becomes a concern. A great example of this is what's happening with AMAT right now. This is a name that we're short, and we saw this actually happen with AMD as well, and it was very telling. When you start getting to that part where the line's going up and you're closing lower and lower on it, you start to get that slope. You don't want that slope. That's the last thing we want, is a downward sloping 55 on anything. And we're starting to get one on AMD. But for now, this is what we have. We are below the 55 again. I will walk you through this. We did this in the pre-market, but this was extremely telling today. I thought it was extremely telling because when you see the level and you see where you're at and you see the battleground that went on today, it was pretty hard to miss how you were popping over and they were trying to convince us that we were just going to ride this line and go. And you can even see it earlier. And I think this is a really important distinction on what they're doing. So let me just explain. This line is right where the 55 was as of yesterday via today. Obviously, these lines move. And what you can see is how we kept testing it and testing it. And then by the end of the day, they flipped us over that 55, only to break us down later. And then what did they do this morning? And you can see those little tests right here. And then what do? They flip us over like we're gonna go. And then what do they do from there? They pull the flim-flam. And all they did was just get a bunch of people in, pull a reversal, and then we just crack. And this is just a 55 on an hourly, just gives it a little color. But you should be able to see this, and what I'll do is I'll just put it in really quickly. But you should be able to kind of get a sense of what's going on here. I actually think it's more like this. And let me pull that back just a little bit. And you can kind of see the battle going on here. It's not exact, but it's there. So for me, we bounced off of it. We're looking to possibly roll back down. The theme that I would take from this is we're unable to close over the 55. Everybody got a little excited yesterday, and that's the point that I was trying to get at with NVIDIA in yesterday's close. It was funny, somebody called me salty, like far from it. But if I want to short names, I obviously want them to rally. But this gave us a really great entry today, and we'll walk through it in a second. But I get it. I love when stocks do this too. The problem is this is bear market behavior. I'm not saying we're in a bear market, but that is bear market behavior. When you rip like this, I mean, 3 things came out yesterday. 3 pieces of economic data came out yesterday, or not economic data, but 3 things about this company came out. Number 1, you had all the people saying, we're buying, all the 13Fs showed it. Then you had this Morgan Stanley upgrade at 12 o'clock. Then you had 350 perfect timed release of the FT talking about how much demand is for chips. It was just too timed too perfectly. The fact that you closed under the open tells you everything you need to know about today. And I would watch that, because the last thing that you want to do, and you right now, for those that watch that candlestick video that I did, you will recognize this particular pattern right here very carefully. If you look at that, that's an evening star. You're setting up an evening star. So if you take out that lower low tomorrow, the probability of you retesting down here is pretty good, and retesting that area. And I think that very well could happen. Now, what's going to get you there? What's really going to crack us to get us there? Well, it could be a couple things, but before we go into that, I just want to walk you through these so that you can do this for yourself. I always like walking through these ideas so that you can see it yourself and understand where we're at. So this trade was relatively simple. I'm not going to get into all the reasons why we did the trade because it would take up a whole video. Comment below if you'd like to see that. I can start doing those kinds of videos. I probably am not going to include the dollar amounts. I don't think it makes sense. I say like, look at me. But if you take a look here, this was pretty telling. This is one of the indicators I would use, which would be VWAP. You rallied, tested, and then ripped. And then after they ripped, and this is the kind of thing when you start understanding what kind of market you're in, this is what they're doing. So they're taking out that higher high and then they're pushing. Well, anybody that wants to wait for this kind of move and is conservative, they're going to wait for the confirm move. In other words, they're going to wait for that to close. And then after that close, what are they going to do? They're going to buy the higher high. What's it do? Fills you and then smashes your hopes and dreams, breaks down here and then breaks, retests 1, 2, 3, and you guys should know these patterns if you've been watching these videos for a while, but you'll know from that peak on right there, this pattern here, 1, 2, 3, right? So these patterns are pretty glaring. I should really do a video on this pattern. It's everywhere and it's so simple. But really what you're seeing is you have the long bar down, you have the other bar that closes near the first or lower 20%. Same, it's bullish, it's the top 20%, and then it cracks. You broke V, so this made the trade easy. This became your stop right up here. That level right there, right? That would be your stop. And then from here, we just bought the 40s, 30s, the puts, and I shorted stock. And what we were looking for was just a gap fill. Very simple trade. And it was just perfect, actually. We did really well with it. And the goal was, look, if it doesn't break, because we had people that were in on the long side, and I'm like, look, if it doesn't break the gap fill, it's probably not going to break. And that was a beautiful trade because you broke to the gap fill, right? So you did well here. Tries to rally, fails, shorter rally, breaks, and then you would just literally be able to use this bar right here if you were trying to enter on the long side, because now you have the double tap. So if you didn't break the double tap, you're going to break the third time? Maybe, but now you're in off this break. I mean, you're really in for $1. Like, it's a pretty easy trade. I didn't do the long. I was more interested in shorts today because of where we are in the market. If we're below the 55, just FYI, you'll note that, let me just pop that in. If we're ever below the 55, you'll note that the majority of my ideas, when we're like this, I start leaning that way. And I actually start getting that way a little bit, or I start getting a little trepidatious when we have like 12, 22 crosses. For those that are new to this channel, I use a 12, I use a 22, and I use a 55. So it's a little different maybe than what you've seen in the past, but that's what I use. And I would recommend that you use what you're comfortable with. So that was NVIDIA. The question is, what do you need to watch for NVIDIA now? What's coming down the pike? Well, let's just look at what transpired. We hit the 22 and we hit the 12 and we closed below the open and closed near the low. And you're setting up a perfect evening star. It's absolutely perfect. And that can get you to retest this 404 level. And people say, well, that can't happen. It can happen. It can happen faster than you think it can. So I would be very cautious here. Now, what could get you there? Well, you have AMAT, which I am currently short, coming out with earnings on Thursday. AMAT is the laggard of these three. We went over this on Saturday as well, and I did get asked in the comments. I apologize that the comments were turned off last night. That was actually me when I switched computer systems. I'll make sure it doesn't happen again. But if you look at this, this is KLAC, great earnings. Lam Research, these are the cutting edge kind of guys. AMAT is really the stodgy semiconductor equipment manufacturer guys that have been around for some time. They're going to be the laggard. And now if you take a look at this, you're going to note this pattern pretty clearly. And I'll just flip to it and we'll take this out. You saw where we were with the averages, but you have this right there. So you probably can see that island already. Let's just do it this way so you can see it for sure. See that island right there? So you have an island. So you broke out. And now you have this bearish island reversal at the top of a chart. You had this bullish one, but it's negated. And now I've got this nonsense that I'm dealing with going into earnings. So I'd be super careful here. I'm currently short. I'm doing okay with it. I puts. I'm not really worried about it. I'll figure it out by Thursday. There's nothing about this market looking at the stocks that should make you feel warm and fuzzy. You were over 500. Now you're not. I'm still short semis and I'm still long the SOXS. And a bunch of other semi names. We gave you this on Saturday and said to watch. I mean, they gave you a perfect setup yesterday with the reversal. If you watch yesterday's video, we actually talked about this exact thing that they did to people today, where they're going to gap you up and then keep you in to make you think that everything's just fine. And then you're going to come in and then you're just going to spend the day hoping. And they gap you down about $2-3. They did it there. They did it in SMCI, right? Where they gap you up and then they gap you down about $3-4. No, don't worry about it. We'll be fine tomorrow. Right? I mean, you have no idea how that plays out. It's actually a bearish harami. It should crack, but you just don't know yet. And you can see the weight and how that's swinging down. So you're going to have to watch those levels really carefully. Now, this HE is very interesting. I've played these kinds of stories before. Spoiler alert, they don't end well. So you can go take a look at PCG. This was one that we did in the room. And this PCG chart, let me pull this all the way back so that you can kind of get a sense of this and where it's been. So these wildfires, sometimes these wildfires are actually caused by the electrical companies. And HE is being sued for billions and billions of dollars. Based upon what happened in Maui, they're blaming them. They're saying that based upon this alert that went out with the National Weather Service, and I'm not going to go down the court case, but the bottom line is their debt's already being downgraded to junk. And I was reading some of it, and it was hard to read all of it during trading today, but they're already discussing that there's no way that's going to probably be able to stay in its current format. Now, what that means, I don't know, and this goes on for years. So that means you could be bouncing all over the place, but we shorted this and we have puts in it. We were actually up 100% in the puts already today. I'm still short and still puts, but this could be a real disaster. I would not sleep on this because you missed it. What you want to do is you want to wait for bounces, and I'm just going to give you some levels that you might want to watch tomorrow. 1634 will be a level that I'll be watching. You can see right in here. And these were levels that I used today just as what I do with when I get in trades like this, I tend to just roll the stop down. That way I stay in it because I don't want to try to find a way to re-enter again. And you can just kind of see these levels at 16. See how you held right in these levels. Any of these rallies would be something I would look at. I'm not really sure who's going to be the net buyer of this. I think where you're going to see the most people have an interest is not net buyers, but short. If you're short, you're going to want to cover, right? At some point, you're going to want to lock it in. I locked in enough, but if you kind of look at this little area right here, and you can kind of see how you're spaced out right in there, and then you kind of look at how you're reacting on these levels, and you can see how you're, flipping right in there, and that's definitely something that you want to pay attention to. So I like this. I mean, I think this could be an absolute dumpster fire. They're going to have the weight, and no institution's going to want to hold this. They're going to have to cut the dividend, the whole 9 yards. It's going to take time to sort this out as far as who's liable, and everybody always wants somebody liable, and maybe they are. I mean, I have no idea. I do know that the stock will get absolutely hammered on this, and if you think this is hammered, it's not. It will get absolutely destroyed. It's just a matter of time. And then it's a question of, are you able to stay in it long enough for that to happen? So I do want to go through a couple of things that I think are interesting that we covered yesterday and just take a look at how they played out today. And you're seeing this theme as well of like these double tops, and we're seeing them everywhere, right? You're seeing this with Monday. Look at these. They're all over the place. I'm trying not to stick too much with a lot of the technicals today, but just give you a general sense of what's going on. I think it's way more important to give you a general sense of how the world's looking right now and what's happening. But these double tops, they're everywhere, and then you're undercutting, trying to rally, and then you're failing. There was no follow through at all. You had 3 major upgrades with 3, not only upgrades, but also target price raises. And this is all we mustered. We couldn't even make that higher high. I mean, you need to hold here, and you can already see the break of the neckline. So technically, the double top's already in here, and you're seeing this everywhere. So I would just be real careful with these. I'd be real careful with everything. I think you're getting that sense from me. This NVTS, we were watching this because it was just so glaring, this level, and you can see it coming all the way across to here. This 1006, and that was the level I called out. We were talking about it in the room. And we hit it, and that was pretty much it. I mean, you can see it right here. I mean, you literally hit it, and then it was just net sellers. I thought this was a great quarter, but you are seeing a lot of this, and if you're interested in these kinds of names, I would just tell you to look for the gap fill, especially in this kind of environment. When you're below the 55, you're going to gap fill. And then you look for that, and then people will close on the gap fill. There'll be supply, and then maybe it'll hold, maybe it'll roll. But at least it's a much lower area of risk area to get in versus playing the nonsense up here. Then you just look at it, and you look at VWAP all day. You probably were never even above it. You never even got close to it, which just tells you had net sellers all day long. NXPI, we just went through this, but I do want to hammer this home. You just want to go through these names if you're looking for shorts. If you don't short, just look at the bear ETFs like SOSX and AAPD. You look at Apple, but I'll get to that in a moment. But look at this. Look how you're just hanging in there. Like that's going to crack. You're going to test 198. I mean, something like that looks pretty realistic. Where you go from there, I don't know. But let's clean this up. And the reason I want to point this out again is, what do you have here? Well, we could say that it's head and shoulders, and then you broke the neckline, right? You could say left shoulder, head, right shoulder, and then you could say your neckline's right in here, right? But really, instead of that, these are pretty equal. So I would go along and say, go along the lines and say you have a double top again. And I'm seeing this everywhere, over and over again. It does not mean that we're going back to here, but it does mean that I need to be aware of what's going on out there and be cognizant of it. So even if you look at Apple, right, you can see this, and then you have the wick, and then you try, right? You're getting that double top feel, and then you're cracking, and then that's it. And I really just want to hammer that home. Like once I shorted this, and we've been short ever since, and then even in the bear ETF, it's doing fairly well. It's just grinding down. One thing you're going to notice is you're going to do better on your shorts on bear ETFs than you're probably doing in stock or in options, unless you're getting in the right price and you're doing it into the rallies, because the implied vols are just absolutely insane. So I've been doing a lot of that into the rallies. That's how I did NVIDIA today. And again, if you watched yesterday's video, I told you I tried twice yesterday. It didn't work. It's just that you have to wait, and then eventually, you cut your losses, and then you hold those winners a little bit longer, which is what I did, and it worked out very well, obviously. But if you take a look at this, you're kind of getting wedged in here with this pendant, right? So if you wind up breaking down here, I mean, where are you going? I think it's a long way down. I really do. And the fact that we're this oversold, I said this today in the pre-market, we're this oversold and I can't even get to 180. And now you're hanging on by a thread here. Like you're hardly hanging on here. I mean, you all see this level coming across, and I think it's really worth talking about here and paying attention to. So you want to mark these levels off. You actually, if you want this really quick tip, put alerts on these, because when these levels crack, they really, really crack. And this is the kind of stuff that I think is very important for people to pay attention to. Now, ONON, this is exactly what we were talking about. We talked about this on Saturday. See how you miss on the earnings front and you beat on the revenue front? Why is that? That's because pretty much exactly what we were talking about. You're seeing CPI drop, which means the pricing is going lower, but PPI did not drop at the same rate. Well, everyone likes my taco analogy, so I'll keep using it. If you're paying $4 for a taco, and then you're here and that taco's costs $2 to make, and then all of a sudden that taco now costs $2.50, well, you just lost all that profit. And that's what's happening here with these kinds of companies. They're starting to lose pricing power. The cost to manufacture the good is going up, but the consumer is saying, I like your sneakers, but I'm not paying that price point for them. And we're starting to see more and more of that. Now, how ONON does, I don't know. But it did let me know, and I'm not the only one that figured this out, that Target looks like it's setting up to fall apart. We shorted this on Monday around 129.5, and we also bought puts. I actually covered the puts and covered the stock, and what I did was we did well with the stock, so I locked that in, and the profit in the puts, I just rolled them out so that I can only lose profit and not principal on them. Because you never know how this is going to go, and I'm already ahead of the game. But this looks like it could be really nasty, so I just bought out of the monies. This looks really nasty. Like, here's your pole, here's your flag. I mean, you should be able to see this, right? But you should be able to see that there's the pole, and then here's the actual flag. I mean, this thing's absolutely huge. So I would not, you need to see it right here, but I would not sleep on that. And then you get your flag right there, right? So I would not sleep on that. I would not. I'd watch this tomorrow. Now the play, usually, I'll give you exactly what I'm looking for. And I want to go through a couple more of these here. Exactly what I'm looking for is this with Walmart. So usually Target blows up, and we all think Walmart's going to blow up, just like, it did that one time here. But every other time that Target blew up, Walmart came in, and then the next day, Walmart crushed, right? It crushes after everyone thinks that Target's out. So the play usually is Target blows up, and then you go out and you try to get in Walmart before earnings. That's what you attempt to do there. So I would watch this tomorrow. I'd watch this very closely. It's definitely one that I would pay attention to. A couple other names that we should really just kind of focus on here, Tesla. You got right to your neckline, you got to that 240, and then you were just absolutely unable to hold this. I would watch this again tomorrow. I think this is far from done. If you don't like shorting, these bear funds look like they're setting up to absolutely rip. Even if something like this got back to its neckline, this is one that I've been stalking, but you're looking at $26. It's still, still 20%. It's still just sitting there. And I think that, if this market comes in, that Tesla, it could absolutely get crushed. UPST was one that I gave yesterday. Actually, if you go back and watch yesterday's video, again, you'll see that all these videos, if you're newer, they're all linked together. And I do appreciate you guys sharing them and commenting on them. It's how I create content. And the sharing helps greatly. It makes me not have to put ads. The algo likes ads, and I don't want to put them in the middle here. So please keep sharing. It helps greatly. Now, this is a very specific pattern. I'm not going to get into it, but when you rallied up here, they were just setting you up for failure, and that's what happened. I'm still short this from the other day, and I still have puts, and I've done nothing with it. Now, if I flip that higher high now here, you're probably going to get over that, and I'll just get out of the way. But that's how I see the world there, and I pay attention to that. The biggest thing that you need to pay attention to tomorrow, candidly, is Target, and how because Target will move the retail market. It'll move XLY. I want to talk about PayPal for a second. So one of the things that you'll note PayPal did was said, we have a new CEO. Well, they came out with the new CEO the same time that Elliot Management, who owns 9% of the company, dumped their stock. Now, what's important about this is if you look at Elliot Management and their selling, let's click back to this chart. I don't really want to be down that low. All right. So if you look at Elliot Management and you look at where this has been for all of 22, 23, they're down in their position. They own 9% of the company. They sold. Well, what does that tell you? One, they either didn't get their way, or two, they don't like what's happening with the company and they think the company's stock is going lower. It's the only reason why. So it was very clear this morning that that's why you had selling. This to me looks like it's setting up to break. I would not sleep on this if this cracks. I mean, that is a long way down if you measure that to the neckline, and that's really what you do. You take this, you measure the neckline, and if you break the neckline from the rally, that's what you're looking at. So this could be down another $10, $12, could be in the 50s, low 50s, high 40s. I mean, it wouldn't take much for this to absolutely fall apart. You can kind of see what's happening here and this enormous wedge that's out there. So just be aware of that. It's definitely one that's on my radar to look at. UPST I do think has massive potential to crack, but I want to talk about some of the things I see going on out there in the market, some of the things that we should follow up on. This is the Nasdaq relative to the S&P. Now, people will say, well, you don't use moving averages on this. Well, I do. So if it has a price, I chart it. So if you look at this and you see how it's rolling, when was the last time you had anything like this? You haven't. You haven't had anything like this since 23, since they all reversed. So they're starting to roll. Now, does that mean that we're going to crash and that the Nasdaq is going to plummet? No. What it might mean is that the S&P may outperform as people roll into defensives, healthcare, and energy names. Start bottom fishing in REITs as tech comes in and we just rotate. That is a distinct possibility. We saw that in early 22 and we could be setting up for it here. Click off of that and you should be able to see this pretty clearly, but there's that head and shoulders pattern again, right? And you can see right there, there's the head. Let's get that arrow back. People like the arrow, right? There's your left head, right shoulder, and then you see the neckline right in here, which you probably can see, but let's just drop that there. You see that neckline, then you tried to rally to it and you failed. So that's definitely one that I'd be paying attention to. I like watching that. I put that out in the newsletter. Make sure you get the newsletter. It's free. So, and if you're on the wait list, you will be getting an invite soon. Some invites did go out today, and we'll have more going out this week. As you know, if you're interested in the room, it is on wait list. So I want to just talk about this, and anyone can go and look at this. And this is TradingView that I use. And what this is the S&P stocks above the 200-day moving average on a percentage basis. You want to make sure you stay above 50. If you start breaking 50, that's when you start seeing significant deterioration in the S&P. So I really don't want to get below 50. If you go look at all the corrections in the market, like the real pullbacks this year, they all happen after we break 50. You can go mark them yourself this March, and you can actually go and do it. Mark this symbol down and then just go and look for yourself and you'll see it. And every rally has happened when we get over 50. Okay. And you just don't know the magnitude of that rally. So that's a really important distinction. Something else that I think is important, I like following up on the things that we go over. I get asked a lot to follow up on the things that we go over, just chart them during the week. And I think it's a good idea. I think it's great and a great way for people to learn. So I put comments on that. One of the things we talked about was just the McClellan Summation. And I do look at where we are on a number, but I also look at the performance of the cross and what happens at the cross at the price of that number. Every high in the New York Stock Exchange, every single high that we have had ends when this comes in. And it doesn't mean that you're falling apart. I want to be real clear about this. I'm not, doom and gloom. What I'm simply saying is that here you went and you went from September and you crashed. You came in a lot. I should call it a crash. And then here you dropped to March. And then you reversed again, and then you went from there. This is the part that you're at now. So if you know where you are, then you know how you should be trading, right? Short term, bob and weave on the long side, leave the shorts on maybe a little bit longer than you think. And the number one name I'd watch tomorrow for action, you have to watch Target. That's it.